Ladies and gentlemen, good day and welcome to the SUPRAJIT Engineering Limited Q2 FY21 results conference call hosted by Anand Rathi Share and Stock Brokers. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vijay Sarathi from Anand Rathi. Thank you and over to you, sir.
Thank you, Inba. Welcome on behalf of Anand Rathi. I welcome you all to the Q2 FY21 conference call of SUPRAJIT Engineering. From the management side, we have Mr. Ajit Kumar Rai, the founder and chairman, Mr. N.S. Mohan, MD and Group CEO, and Mr. Medappa, the CFO and company secretary. As always, we will go through with initial remarks about results from management, key takeaways, and then we will follow it up with Q&A. Over to you, Mr. Ajit.
Yeah, thank you, Vijay, and I thank Anand Rathi for organizing this call. Welcome you all and good morning to you. This call is in relation to our Q2 FY21 results. As Vijay said, we'll give you a quick brief from all the three of us on the operations and financials, and let the questions come in post that. With that, I will hand it over to Mohan to give you an operations review. Mohan?
Thank you. As you would have all seen that Q2 FY21 has been the best quarter. In fact, I would like to say that it has been the best quarter in the history of SUPRAJIT till date. So we have had a very good run in the last quarter. Of course, we had tremendous challenges. We had supply chain problems both on the local supply front and the imports front. And of course, the COVID protocols being adhered to added to the complexity of running operations. Having said that, I think we have managed wonderfully, and each one of our teams, be it in India or outside of India, have raised their bar and met those challenges. To start with, let me start with Westcon. We had a flat growth, but with improved margins, and this was under the threat of COVID, as I've been mentioning. We have got a good order book there. OEMs are ramping up for their busy season, as you would already know, that it's more the second half, which is our busy season here. It is cyclical in non-automotive sector. Our Juarez, El Paso, and Wichita have become hotbeds of COVID. Therefore, we have a few of our management team who are sick, and it has been pretty much a challenge to keep the operations running and supplying. But it's the same thing even with our customers. Therefore, we are all sailing through the same boat in US. But it is becoming more and more rampant in US. Moving to SUPRAJIT Europe, both our Tamworth and Cooper continues to give splendid service to the customers in mainland Europe, and we have got good growth and reasonable EBITDA out there. Tree-Fall Luxlite has been a bit of an uphill task, and more specifically with the second wave happening in Europe, I think we are facing some amount of uphill there. We are still moving through our restructuring efforts of operations both in Luxlite. Moving on to the domestic front, on Phoenix Lamps division, Chennai has recorded the highest production levels. As you would know that from October last year is when we acquired this facility. So we have completed 1 year, and in this 1 year, we have recorded the highest production levels, and we have also started catering to the market under the Phoenix brand in the southern region from this plant. From our DTA, our domestic tariff area plant, which is what we call as A1, it's completely loaded, and in fact, I would say if there is a problem, it is a problem of plenty. Our SEZ plant got audited by 2 major marquee brands, and the plant got approved for supplies from the SEZ. Moving over to the domestic cable division, we had a very good growth both on the OE and the aftermarket front. We have tremendous pressure on the plants to ensure supplies, but I would say that the team is doing extremely well under these circumstances. Overall, we at SUPRAJIT had put in a lot of efforts in reducing fixed costs, and I think those fixed cost reductions over the first quarter has paid off. However, we rolled back our salary cuts from September onwards, primarily to keep our teams motivated because everybody is working so hard. And I would say that between Q1 and Q2, it was definitely a clear V-shaped recovery with a very, very sharp upward slope. We see some challenges coming ahead, like international freight issues, commodity prices, etc. But I'm pretty much confident that the team is going to meet these challenges. Thank you.
Thank you, Mohan. Medappa?
Yeah, thank you, sir. Good morning to everyone. We announced the quarterly and half-yearly financial results for September 2020 yesterday. I'll go through the quarter-on-quarter comparison since YTD numbers are not comparable due to subdued performance in Q1 2020. The overall performance at standalone and console level for the quarter have been robust in terms of revenue as well as profitability. The console revenue for the quarter ended September 2020 was 443 crores as against 398 crores for the corresponding quarter of previous year, recording a growth of 11%. Q2 2020 was a highest quarter in terms of revenue compared to previous quarters. The console operational EBITDA was 73 crores as against 56 crores for the corresponding quarter of previous year, recording a growth of 32%. At standalone level, we have achieved a turnover of 312 crores as against 275 crores for the corresponding quarter of previous year, recording a growth of 13%. The standalone operational EBITDA was 58 crores as against 51 crores for the corresponding quarter of previous year, recording a growth of 13%. We are also happy to state that overall group debt level has reduced to 317 crores as on September 2020 against 380 crores for the year ended March 2020.
Yeah.
For further, if any
go ahead.
results, you may approach me directly at any time, even after this investor call. Thank you very much.
Thank you, Medappa. Before I let you all ask your questions, I just wanted to end with a quick summary in the sense that, it was easier to lock down, but unlocking and scaling up was the biggest challenge. I think the operations team had a phenomenal task of managing the COVID situations, dealing with sporadic incidences of COVID within our operational units, and then at the same time scaling up to meet customer requirement. This also required our vendors to scale up. The issues relating to manpower, because a lot of the migrant laborers were not available a few months ago, although the situation has improved now. And then there are all challenges of commodity price increases, supplier not able to scale up, and then the global transportation issues with the containers not being available. So we had multiple challenges, and not being able to visit customers on any issues. They were all absolutely new challenges for the team, but I must say that the team has stood up to the challenges and have done well. So the results speaks for itself. So without any further ado, I would let the questions to come in, and we'll answer as much as we can. Thank you very much.
Thank you very much. Ladies and gentlemen, we'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question enters star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Nikhil Kale from Axis Capital. Please go ahead.
Yeah, good morning. Thanks for taking my question. Congratulations on a very good set of numbers. So my first question was on the automotive cables division. Very excellent performance on the top line, 12% revenue growth YOY. So if you could just provide us some color on what's driving the outperformance versus the industry. You mentioned in the press release that there are certain couple of new projects which have gone online. So just wanted to get some more color and understand going forward, what kind of outperformance are you looking at versus the industry production?
Thanks, Nikhil. I think the situation in the cable division is this. The Indian automotive OEMs have been scaling up the production, as you know. The numbers are all there, particularly the passenger cars as well as two-wheelers have done well. There are other things that is we have mentioned in earlier calls as well, that there has been slightly higher content per two-wheeler due to BS6 situation. So that has also helped us to get a little bit of a tailwind on that. And most importantly, I think it is the aftermarket also, because that's where we had a very robust growth. The reasoning is that during the lockdown, there has been hardly, a lot of these shops were closed, and then they were selling during the second quarter, and they wanted to refill, shelves. There is a talk of reduced imports from China as far as the cables and competition is concerned. There is also an issue of gray players slowly winding up, and that is also giving way to well-known, well-branded suppliers like us. So there are all multiple levers, I would say. And as far as the new businesses, I think I was mentioning probably more about for the automotive exports. Despite globally there is a degrowth in automotive business, those cable businesses that we have won for the newer platforms and the new businesses, they've all gone into place. Although the original volumes of our existing business has come down, on top of it, the new businesses sat on it. So the overall growth has been good there as well. So there has been, interesting overall, dynamics which has helped us to, clock that kind of a growth.
Okay. On the domestic cable aftermarket, would you give us some numbers in this segment?
I think if you see, the pie chart that we have provided, all it says is that, our compared to last year, we had, just 23% as our aftermarket on an overall pie. That has increased to 28%. Although I must say that first quarter has been, been a very bad quarter. So it may not be an entire reflection, but that 23%, which was last year's number, is certainly going to be 25 or 26% by the end of the year. So that means to say that to that extent, our growth has been more. So on a comparative basis, I think, we have got multiple products. We have got cables, we have got, halogen lamps, we have got other products, speedometers. They are all in the aftermarket. So I would say overall, I think the growth has been about, probably 20%.
Yeah. Okay. And my last question was on the margin front. Extremely strong margins across the divisions. So just wanted to understand how sustainable do you think the margins are, especially at Phoenix and the non-automotive division going forward?
Well, I think one quarter really cannot be taken as a benchmark. I think we are also very happy and excited about the margins that has been, come out in this quarter. But we also must realize that there is a huge commodity price increases happening. So there is also customer usual requirement of price reductions from time to time, etc., etc. So overall, I will say that I don't want to really get carried away by one quarter's margins. I think we have, in the beginning of the year, we have actually, scaled down our margin expectations. But I think it certainly is better than what we have said in the beginning of the year. I think overall on a consolidated basis, I think, 13 to 15, 16% is possible. The range where it will be, it all depends upon the volumes as well. So we need to watch how after end of November, when all these holidays, the festivals are over, how the demand scene is. If it is robust, I think we'll have a good year. But otherwise, we still have to see. So we are going to give a big range of anywhere from 13 to 15, 16% as the range for the, on a quarter to quarter basis. But for the whole year, it probably will be, even lower than that. Yes, we probably will be around 13% by end of the year, I think.
Thank you.
Thank you. Our next question is from the line of Chaitanya Shah from Silverlight Partners. Please go ahead.
Hello, sir. Good morning.
Good morning.
So my question is broadly regarding the global scenario that's happening right now. I mean, I first wanted to understand what is the total addressable market for cables globally that is addressable by the company. And just a corollary to that, what part of that market is being served by China? And are you seeing any anti-sentiment against China translate into orders for you or the broader auto ancillary sector in India?
I'll give a general answer. I think it's difficult to be specific because the cable requirements across sectors, across regions, across geographies is very difficult to assess. But I would say that our assessment done a few years ago says that the total addressable cable market of various kinds would probably be anywhere from, let's say, $2.5 billion to $3 billion. What is the Chinese content on that? I think it will be fairly significant, but there are a lot of players also in China doing local business as well as few of them doing global business. So there are at least three well-known Chinese names who are in the global market competing with people like the Koreans or the Japanese or the Americans and Europeans. So they are very much there. The competition is all part of the game. In terms of China plus one, I mean there is a lot of talk. There is, I think right now everybody is fighting the pandemic. I think the challenge today for any supply chain manager is to procure the material for their normal things. Even the existing suppliers have challenges to deliver to customers. So I would say that right now the challenge is to meet the requirement of their individual requirements currently. And I think in the longer term, I think whether there will be better opportunities for suppliers outside of China, I would say it's a positive for us, but are we seeing a great move at the moment? I don't see it. But we have enough business to do. That's a different matter.
All right. And so my second question is regarding an intangible asset on the balance sheet. So I saw an intangible asset worth around 100 crores called customer relationship on the balance sheet. I just wanted to understand what this asset is, and I think the useful life of this asset is mentioned as 10 years as per your annual report. So I just wanted to understand the logic behind it and what this means.
Medappa, would you like to comment on that, what it is?
It's a goodwill raised at the time of acquisition. It is absorbed over the period of 10 years, and we are allowed to take tax benefit also under that. It's ongoing accounting entries.
But it's mentioned as separate from goodwill, so is there something...
They bifurcate into customer relationship and goodwill. It's actually basically goodwill only, customer value.
Okay, fine. Okay, thank you, sir.
Thank you.
Thank you. Our next question is from the line of Viraj Kacharia from Securities Investment Management. Please go ahead.
Yeah, hi. Thanks for the opportunity and congratulations for good set of numbers in such a challenging environment. And I hope everyone in the SUPRAJIT family is safe and healthy. I just had three questions, primarily to Phoenix Lamp and play in that segment. A couple of quarters back, you briefly, gave an idea on how the industry is seeing consolidation and us looking primarily to, compete at a certain price point in a bid to accelerate that consolidation in the lamp segment. At the same time, we were also trying to piggyback on Osram and now Philips and cater to the lamps business. This is a segment which we internally also think that over the next 5-7 years, we don't see a terminal risk yet. So one is, how is the overall consolidation phase now within the industry? Is that now accelerated? Has the price moderation now settled? And do you see enough opportunities in terms of capitalizing those either with Osram or Philips? That is one. And second, what we've seen in with similar product lines in other industries in general lighting, that over a period of time the industry kind of decays and the investments which one makes initially, one eventually has to take some kind of impairment or write-off because of the shift, say, in year being towards LED. So how are we kind of dealing, I know it might be too early even to talk about it, but, when we kind of looking at expanding and investing, how are we kind of dealing with that aspect in mind? Thank you.
Thank you, Viraj. The consolidation is an ongoing issue. I think it's not only in halogen. I think even in cable business there is a consolidation happening as we speak, because customer wants somebody who has got the wherewithal to deliver anywhere in the world. So not everybody has it. So consolidation is on. If the price pressure is off, it is not. We are still fighting the price war. But as you have seen in the numbers, despite those price wars, we are having a fairly decent, steady margins in the business. So, yes, we are fighting a price war, but yes, we also are able to manage our margins. That is largely because our scale of business has gone up. As you've seen, the volumes are growing. We have added the capacity from Chennai now. So, it all is helping us to be recognized as a true global player. So, that helps in convincing the customers, and that's exactly happened with those one or two names that you mentioned. And we are continuing to do more and more business. In fact, Chennai had an all-time high production in the last couple of months, considering their own historic, 20 years of production, because that means we were able to get new things on the table for Chennai plant. So, in terms of the impairment, we have already sweated the equipment since we bought 5-6 years ago. And in fact, today the problem is not about impairment. Problem is about capacity. We probably will have to invest more in at least certain parts of our requirement, because the demand is outstripping our ability to deliver to customers. I mean, some of our HS1 lines are now running 3 shifts, and we still don't have capacity. So I think we are far away from that kind of a thinking at the moment.
So, okay. So what I meant by impairment is maybe not now, but maybe say 5 years or 7 years down the line when...
By the time, assets would have been sweated down to whatever the base value,
Okay.
There will be nothing to impair actually.
Okay. Just 2 follow-ups on this. First is, you said the pricing pressure is still on, and, given the kind of liquidity pressures most of these smaller guys elsewhere outside India would have seen, one would probably think that a lot of capacity would have already consolidated. So what is still driving this price moderation in the industry? That is one. And second is, on, say, Osram or Philips, since we have now proved them that, that we are kind of a much more capable and cost competitive player, and we're seeing a good amount of supply consistency from our side. What is the kind of opportunity size we can cater to, in terms of the global requirement? So any color you can provide in terms of the opportunity size from them, and how are we looking to scale that up? Because incrementally they are also kind of looking away more and more towards contract manufacturing and focusing on the LED part of business.
Yeah. I think, these customers are happy. They are buying more and more. I can easily say that the customer from where we bought the assets in Chennai are buying more today than a year ago, or 6 months ago. So I think that opportunity is certainly there, and we continue to capitalize on that. So pricing, as long as the volumes are possible, some of these people from the, whether it's China or even Korea, ultimately they, as much as possible, they try to keep their plants operational. So they just, accept the price and try to manage, But then, they probably, quite a few of them probably are, in the red, which we know are in the red. But then, they keep operationally at least alive their plants. So it takes some more time, These things don't happen in a year or two. It's a slow, ride to oblivion, as if I may say so, for some of them. But some of them will stand on. So there will be still few players in the market. So it is just that at the moment, in terms of purely margins and cash, we are the strongest in this business. So we'll continue to stand strong and see what happens in the market.
Thank you. Mr. Viraj Kacharya, may we request you to return to the
Sure.
Thank you. Ladies and gentlemen, we would request you to limit your questions to 2 per participant. Time permitting, you may come back in the queue for a follow-up. We will take our next question from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Good morning, sir, and congrats for the great set of numbers in this tough times.
Thank you.
Sir, revenue mix during this quarter has improved for the four-wheeler. Is it because of the strong export growth or addition of the new clients in the domestic front?
It's mostly exports, I think. If you see our exports automotive exports have improved nicely.
So what is your current revenue mix in the export side, domestic versus export?
I think you please come offline with Medappa, he'll be able to provide. I don't have it immediately, I think.
And sir, what was the growth rate in export during this quarter in four-wheeler side?
Between SUPRAJIT Europe and SUPRAJIT Automotive, the growth has been about, I think, 15 or 18%. Medappa, do you have that number in mind?
18%.
For the quarter, yes. 18%, as you said.
Okay. Sir, we have seen sharp expansion in the Phoenix Lamps and China division margin. Is there some one-off or is there some supply disruption of your competitor? Could you give some sense, more color on the margin expansion on these two entities?
Phoenix Lamps, is it you're talking about?
Phoenix Lamps and China division both, sir.
Yeah, they are together actually. There is an increase of, as I see it, about 100 basis point increase. It is just, volumes, efficiencies, Mohan, do you want to comment on this?
Yeah, it's primarily efficiencies which are driving, because after you cross a certain threshold, it's a pure volume play, and that's what we have done. It's a pure volume play now. Therefore, that's what has kind of kicked in. In terms of material costs also, we have been able to shave off a percentage point. So overall, I would say it's more how we have run the operations.
So although the China division revenue grew only 7%, but there is a sharp expansion in margin in Q2. So just wanted to know that this sort of the margin expansion.
Yeah, on the Sena side, I think what is happening is that, at the Westcon level, I think the margins are where it was the similar level as last year, whereas the Unit 9, which is the one that exports from India through to Westcon customers, they're all now group's customer now. I think that business also has grown. Since it is made in India, I think the margins are much better here. So that has helped us in increasing our tailwind. Going forward, again, these are all the question of product mixes. So year on year, in particularly in the non-automotive business, the product mix also counts a lot. I think it is just also helped us with the kind of product mix that we are currently having. So, whether it is sustainable at that level, only time will tell, depending upon what the product mix is. But I also must tell you that, right now, the material costs are a big issue, whereas particularly in our global customers, there is no price escalation possible. So with the significant increases in steel prices, etc., there will be some margin pressure on this division as I see it. Whereas in domestic OEM market, when the price increases happen, or rather commodity price increase happen, there is a mechanism to pass on, whereas in exports it isn't. So to that extent, I would, caution saying that, okay, it was a great quarter, but, the product mix and the commodity price are a matter of the reasoning why it can change going forward.
Okay, sir. My last question is related with this channel inventory. How much channel inventory is lying with you right now?
What do you mean by channel inventory?
I mean that inventory that is from the old RMs. So you can get a benefit of lower RM prices in the next quarter.
Typically, once we are mostly OEM, right? Of course, we have a good aftermarket, but then OEMs, it is day to day, so there is no channel inventory with the OEMs. Whereas in the aftermarket, there may be some pipeline maybe there at the distributor, which has been sold at the old price. But I think all those are not really material in our P&L, I think.
Okay, sir. That's all.
Thank you. Our next question is from the line of Kinari Shah, an individual investor. Please go ahead.
Good morning, sir. Congratulations on a very good set of numbers. Since I'm a new investor to this company, I just wanted to understand from you that we did acquisition of Viscon Controls, in order to diversify, from a one, have a diversification. But I would want to understand that why did we select this particular company? What triggered our interest in this particular company?
Good morning, Ms. Shah. See, Westcon is in non-automotive business. When we wanted to de-risk our business in getting into multiple segments, that was the basic philosophy with which Suprajit has been and continue to work on. We have been in strongly in automotive business, so we wanted to de-risk the automotive business. So we wanted to get in, but the cables are used in non-automotive business as well. So Westcon was the company that was available, whatever, 3 or 4 years ago for us to acquire in those days. And they had very good customer base, including, the John Deeres of the world and, all of them. So it was a perfect fit for us so that it helped us in getting a strong root in North America. It helped us to diversify our product mix from, the automotive to little bit more into non-automotive. And I think that's basically the reason why we did the acquisition.
Okay, sir. And sir, one more question, that 48% of Viscon sales, it just comes from 3 customers. So do you feel like there's a lot of concentration risk over there, or we are trying to reduce that?
A good point, but again, we look at our customer exposure from a group perspective. There is no single customer of Suprajit who has got more than 10% exposure to the group on an overall sense. And the customers that you say 3, which are 48% Westcon, only one of them are in the top 10 of our Suprajit group. So from an overall perspective, there is no risk. And with these customers, our relationship runs strong for many years. So we don't really see it as a big concern. And we continue to look at increasing our share of business with them as we look for new customers also.
Okay. And sir, final question. Okay, sorry.
Could you please return to the queue? There are several participants waiting for their turn.
Yes, sure. Thank you.
We'll take a next question from the line of Mr. Resham Jain from DSP Investment Managers. Please go ahead.
Hi, good morning, team.
Yeah, good morning.
So I have a few questions. So first is when we look at Westcon margins of around 15%, and as you mentioned, we are doing a bit of exports also from India. So I'm sure the overall margins in India will be much higher than the average. And hence, do you see any bigger opportunity of increasing the non-automotive pie to India? We have been doing this since last, I think, 2 years since you acquired. But are there more green shoots on that front of exporting out of India?
Yes, good morning, Resham. Yeah, true, you are very right. I think today when you look at our Unit 9, which is, when we say Westcon, we are actually talking about Sena division, which has got 3 plants, Wichita, Juarez, and Unit 9. The growth is actually coming from Unit 9 within the Sena division. So more and more is produced out of India, which is at a higher margin. So that is, the answer is yes. But at the same time, some of the customers are, wanting to have it from Juarez or Wichita plant. So there it continues to be a situation that we need to produce there, where typically the margins are lower. Obviously, assembly costs and labor costs are much higher. So going forward, the plan is that given, let's say, look at next 5 years, we should be making a lot more in India and, compared to what we are currently doing in Juarez or in Wichita. So, but at the same time, we are also now starting to getting into the competition with China as we are getting in more and more, making inroads into the U.S. customers, of the non-automotive. There are others are also, understood our strategy of 3 plants, and they are also trying to offer from, lower cost geographies. So that brings in some competition, but, this has been 1 quarter where we have suddenly seen some interesting products being commercialized, having a higher margin, and, some probably positive movement of currencies. There are a lot of things that has aided to get into that 15% from the 7%. So we'll have to wait and see for a couple of quarters to see what is more sustainable, actually.
Understood. So my second question is, and this has been a question since last many quarters, but now we have almost like 350 crores cash, and this year we mentioned in Q1 call that FY21 we don't have any major capex, so we will further accumulate cash in the second half, and maybe next year as well. So our cash balance maybe by the end of next year will balloon substantially, and which will pull down the overall ROCs of the company. So what are your plans? I know there will be inorganic opportunities which you are always looking at, but anything which you can see right now?
Your point is right. I think our cash will increase because the cash flows are strong. We are net. There is surplus cash being generated from the system. So the point is well taken. I'm sure, we will debate within the board as to what's the best way we can utilize the cash that we have, and we will take an appropriate decision at an appropriate time. Coming to the opportunity side of it, there are opportunities, honestly, at this time. But these things take their own time. And, we are very conservative, very careful. We are very value-based, buyers. So sometimes there is a gap between, the buyer and the seller, which is difficult to bridge. But we continue to look at, there are opportunities. When it will happen, it's difficult to say actually.
Okay. But any areas, sir, which you can give your thoughts on in terms of which areas you would like to go into?
Obviously, in our core areas, we'll always be interested, which is obviously cables and, halogen, those areas, whether it is asset purchase or companies. That is certainly very much what we would look at, because ultimately we want to be the leading in these businesses, not just in India, beyond that. So that aspiration is always there, and that is a focus one. And of course, within India, it all depends upon what comes. And I think our outlook is very clear. We want a product and not a process company. So we need to have across the sector presence for that product. That means if it is a product, it should be a proprietary part or a product which has got a requirement in two-wheeler, three-wheeler, four-wheeler, LCV, and an aftermarket ideally. And those, we have multiple filters. So a lot of these opportunities don't pass through these filters. So when they pass through, then there is a value issue comes in. So we are little careful and very, I would say, conservative in that. But, despite that, we have done our acquisitions in the past. So I suppose the right time and opportunity will come.
Okay. Thank you, sir. All the best.
Thank you, Resham. Yeah.
Thank you. Our next question is from the line of Sunil Kothari from Unique Investments. Please go ahead.
Thank you very much, sir, for opportunity. I'm little new to the company, so please ignore my some ignorance. Sir, my question is, you have so many years of experience, you being at a vantage point. Do you see any major shift of in terms of opportunity, in terms of external competition, looking to replacing maybe somewhere some part of Chinese market they captured, and international players, European and US customers, you already penetrated. So there is now acceptance more and more towards Indian players. And internally, India as a country also, are you seeing any change for, say, little lower hiccups, lower speed breakers? Your larger picture view will be very helpful.
I suppose you are saying that Indian companies, whether they will have better opportunities going forward?
Particularly SUPRAJIT and Indian companies, yes.
I mean, you're talking about generally, okay.
Yes.
Well, the question is not whether they're Indian or anywhere. Ultimately, the question is how competitive one is in their manufacturing. The operational excellence and ability to produce a product at a cost which is globally competitive is the essential for success, whether it is made in India or China or anywhere else in the world. Mm-hmm. What we have been aiming to do is that can we be the best-in-class manufacturer, being able to deliver products to any customer anywhere in the world, including the logistics, at a price which is globally competitive. I think as long as it is done, or as long as we are able to meet that, I think it does not matter where the competition is from. I mean, there are competitors not just from China. There are people, equally good competitors from elsewhere also. So it is a market where efficiency and more, efficient manufacturers will be able to win the race. It's a long winding road, but that's what we have been doing, is to see how we can continuously be more productive, continuously be more efficient. That is where we have been able to consistently do well over the many years. So there are competition. I mean, it's part of life. So.
Right. So, sir, you have proven this all internally, but what I'm trying to understand, externally you feel there is a little more support or maybe little less hiccups. Any you would like to mention?
I mean, I didn't understand the question properly, but if you're saying that whether we are able to compete with the world, I think, we are winning new contracts. So that simply means that we are able to compete in the world. So,
Thanks a lot.
Yeah.
Thank you. Our next question is from the line of Jayesh Gandhi from Harshad Gandhi Securities. Please go ahead.
So even I am new to the company, so pardon me for if the question is repeating.
Sure.
So in this cables division, can you give your opinion what would be the volume difference once we migrate from the current two-wheeler, current engines to electronic two-wheelers? I mean, roughly if you have any view on that.
It is difficult to say as to how these first of all, let me also make this clear. As we see it today, there is hardly any production of EVs in India, and it's going to be a long time before, the infrastructure is really in place. In terms of, general trend, I think there will be continued usage of cables, whether it is now or with the EVs or whatever the newer technology that is coming. Basically, what one should think about is that what is the cable doing is a low-cost, efficient way of transmitting load or movement from one end of whether it is a accelerator, clutch, or whatever the lever in two-wheeler, or the same way in a lot more application in car. So we see we look at automotive in general, in terms of how the scenario is going to be. Overall, we don't really see a major threat to us. We are not in the engine pack where these products go. EVs will replace the current engine packs. So, on an overall automotive scene, we don't really have much of a concern. In fact, we think that there are opportunities going forward, particularly in the automotive business, which will add to the current range of products, of cables rather.
And are we, sir, engaged with any of the two-wheeler guys who are currently in manufacture of this EVs?
Yeah, there are in India, I don't know, there are a lot of them are there. Certainly sure, they are still so small volume and value, so it doesn't come into our radar now. But our respective units are supplying to quite a few of these guys.
Okay, so that's all from my side, sir. Best of luck for future.
Thank you.
Thank you. Our next question is a follow-up from the line of Chaitanya Shah from Silverlight Partners. Please go ahead.
Hello, sir. Thanks for taking a follow-up question. I wanted to understand, I was just looking at the two-wheeler industry for the last 2 years, and, last year there was a volume degrowth of close to 14-15%, and I'm assuming this year it would be in the similar range. So what is your view going forward in terms of what would be the pent-up demand in the system, and could we see really good growth for the next 2 or 3 years? I just wanted your view on it.
I think my view will be as good as yours, Chaitanya, but for whatever it's worth, I'll give my view. But this year there will be overall degrowth. It will be so for the entire automotive business. But, as far as SUPRAJIT is concerned, we still think that we'll come close to it, somewhere close to last year's number, maybe 5% here and there, 5-7%. The degrowth of last 2 years is true, but, the individual mobility or a personal mobility is a matter of pride for the owner. So, and also with the, the systems, particularly in India, whether it is the transport of through the buses or the metros or whatever, are still not in line with the world standards. So we are still behind. So people are still depending upon, personal transportation. So from that point of view, there is a argument that there will be continued demand. At the same time, I think as the rural and hinterland, economies start improving with, better prices for their produce, etc., their purchasing power improve. There, the penetration is still low in India. So that is another area for growth. So will I expect a growth next year? The answer is yes. Now, whether it is 5%, 10%, 15%, I don't know. But there should be a growth going forward from next year.
All right. Okay. Thank you so much, sir.
Thank you.
Thank you. Our next question is from the line of Chirag Shah from Edelweiss Securities Limited. Please go ahead.
Yeah, thanks for the opportunity. So, just a clarification, so if we look at quarterly,
Mr. Shah, sorry to interrupt you. We are not able to hear you very clearly.
Hello, am I audible now?
Okay, go ahead, Chirag.
Yeah, so I was saying, sir, in the quarterlies, other expenditure has seen a significant control. Will it stay same, or we can expect a sharp jump over there? Is it a new normal? If you can just indicate that, because it has been a big lever for margin performance in the quarter.
Some will stay, but then some of them have obviously been reversed because, for example, end of September we had a salary cut in place that was reversed and things like that. So some of them will come back. Some of them we are still hoping that it will stay, because what has happened during the lockdown period, we looked at every opportunity to see where we can cut costs and optimize our own resources. So some of them I am hopeful that will stay. So there will be an overall, I would say, positivity in that area of overheads. But what happens is that, right now we are, for example, just to give an argument, point, we don't normally run a night shift, but then there are certain places where the business or the requirement of customers or the aftermarket is so much, we are running a night shift, which is at a, obviously not at the best of efficiencies, but we still have to run because market wants more. So then what happens, it sort of catches up with these expenses. So there would be some positivity that will continue, but, again, some of these costs will catch up over a period of time.
And second clarification was on the pricing pressure you are indicating, the cost pressure.
Yes.
Like, presume you would be having back-to-back contracts with the customer. So with a lag, the recovery is not what is worrying you, right? That is not when you say commodity pressure, are you referring to recovery of that commodity pressure? Is really
what's happening is that, as you've seen, for the maybe this quarter or last few months, the customers have done well, but overall the year the number is still negative, right? So there will be a continued pressure from the customers to not to give what is entirely, let's say, we think we are entitled to. So there will be some amount of discussion, negotiation that go on in this process. So we feel that the pressure of not wanting to give some price increases will be genuine this year from the customers. So that is one pressure. And secondly, of course, the other idea is that, particularly for the global majors, there is no such possibility of pass on. So that will have to be absorbed. So there is other side of the story.
Mr. Chirag Shah?
Control cable market opportunity.
Mr. Chirag Shah? So may we request you to return to the queue, please? There are several participants waiting for their turn. Thank you. We'll take a next question from the line of Saurabh Shroff from QRC Investments. Please go ahead.
Thank you very much and good morning, gentlemen. Congratulations on a great set of numbers. Just to clarify actually to this point, so you mentioned that on the Indian customers you have a pass-through on raw material or other commodity prices, but for the international we don't. So half of our business is international. So does that mean that in that case there might be a 3-6 month lag, or whenever the new contract or order comes, only then you'll get a pass-through?
Yes, I think Indian customer, again, pass-through is not automatic. It's a much negotiated and debated issue. So sometimes you get a good pass-through, sometimes you don't get all of it that you need to get. That's number one. Number two is that on the export front, yes, you are right. There is no price adjustment allowed. But you must also realize typically at least the dollar has been depreciating. Rupee has been depreciating against dollar. So that gives some kind of what I would call as a edge or a hedge against that price movements of materials. So overall, also what happens is that when you get into a new contract, we get at the current exchange rate as well also current market price. So if you look at one customer with, let us say, 50 products of theirs being produced, some of them would be, after 3, 4, 5 years would not be getting the great margin, whereas the one that has come in newly probably has a better margin. So overall, the basket probably sort of gets adjusted dynamically as we go forward in business.
Yeah, so that's what my understanding. So this is not so it's not a big raw material or commodity pressure that you are feeling.
No. I got your point, but what I'm trying to say is that the kind of price increase that we are seeing now on plastics and metals, etc., is not what we normally see. It's been a lot more. So that is where the concern has been raised.
Understood. Okay, fair enough. And sir, secondly, the restructuring that we were doing with Rifa and Luxlite, we took a one-time charge last quarter as well. How far along are we on that? And my final question is, if you could just explain to us ballpark, what is our content per vehicle when it comes to two-wheelers, passenger vehicles, and CVs?
Okay. Rifa Luxlite, where we are continuing to focus on to make sure that they are an efficient outfit, and whatever needs to be done to make them efficient and continue to serve the customer, we'll continue to do, which may require some more tightening of the belt as we go forward. That is number one. Secondly, we are also trying to do direct exports more and more so that the dependence on, let's say, Rifa and Luxlite also comes down over the, multiple years. So that's answer to that. In terms of the content per vehicle, in two-wheelers, it is all the question of how complex the cabling is. So there are some vehicles, two-wheelers, simple cables will cost you 4 or 5 cables costing you 100 or 125 rupees. Similarly, in another vehicle, very complicated, complex, having a very high requirements of specification, the same 100, 125, 150 can be 300 or 400 rupees. That's on two-wheelers. In a car, it can go up to 1,500 rupees if you look at all the possible cables. So it's a big range. So it all depends upon the vehicle design and type of vehicles.
And in general, as a trend, has the content per vehicle been increasing for us? As the specs get more and more advanced, I guess as the lower range models will get more advanced. Is that a trend that is generally seen, or is this number sort of more static over time?
I wouldn't like to give an unnecessary optimism saying that it will increase. It has increased. If you ask me, has it increased now? Certainly in BS6 there has been some improvement of content for us. But is it a trend that will last forever? I don't know. I hope so. But as more and more complex requirements come from the customer, the product cost goes up. So that is a positive sign, but we still would like to think that the content will remain where it is for some years, although there is a possibility of it going up, maybe in some cases even coming down, but generally it will remain there.
Mr. Shroff, may we request
Fair enough. Thank you. Yes, thank you very much.
Thank you.
Thank you. Our next question is from the line of Shyam Sundar Sriram from Sundaram Mutual Fund. Please go ahead.
Yeah, hi sir, good morning and thanks for taking my questions, sir. Very strong performance, congratulations on that, sir. So my questions are primarily on the aftermarket side for cables and lamps per se. How do you see because across multiple aftermarket products we see very strong demand trajectory. So I think last quarter also you did allude to that. So from this quarter as well as slightly from the next 6 months, how are you seeing this aftermarket demand therein, and what is driving this? Is it more of existing vehicle park, increasing usage of the existing vehicle park that is driving this demand per se? Any perspective you can provide on that? And yes, sir, that is my first question.
Thank you, Shriram. Mohan, will you answer that? Take the question.
Sure. See, more than the demand, I think demand has always been there. It's a question of where the supply was coming in from and how it is getting streamlined. There are a couple of reasons. Reason number one is that renminbi has strengthened. Therefore, the Chinese imports are becoming more expensive. Second thing is getting it from China in terms of freight cost has gone up. And also the timing has gone up because it's all getting routed through Hong Kong and other places. Therefore, that route, I would say, of supply chain is disrupted. Second thing is the government, rightly so, has tried to streamline the economy and bring everything into the straight way of doing business, be it e-waybill or e-invoicing and all this stuff. With this, all these kind of fly-by-night operators who used to do have kind of not been able to sustain themselves. Plus, the commodity prices increasing and the lack of liquidity for these people have choked them. Therefore, established players like us have got a very strong foothold into the market now. And that, I think, primarily is playing. So, all said and done, the government's initiative of Atmanirbhar Bharat has really played into it. And we also ran an advertisement campaign for our Phoenix lamps division, explicitly trying to capture on the Atmanirbhar campaign, we called it. And we sent out cartoons telling, buy Phoenix lamps made in India. So I think there are multiple reasons. I don't think there is any major change or shift in the demand. I think it is more to do with the supply.
Understood, sir. That's very helpful, sir. So essentially, you're saying it is more of an unorganized, if I might put it that way, to an organized and a larger player shift in the lamp business. Is that a
Yeah, I would agree with you, Sriram. I think so. There is a lot of people are preferring to go to a known, established and quality product supplier than to go to anybody, because that's what the thing is, I think. Thank you.
Understood.
And moderator, I think it's coming close to 12 o'clock. I'll take maybe another one or two questions, I think. We should wrap it up soon.
Sure, sir. Mr. Sriram, do you have any more questions?
Sir, one last question, if I may. Sir, from the government announced PLI schemes, I'm not asking specifically for SUPRAJIT, sir. Just from an industry perspective, where do you think are the top few aggregates that are heavily reliant on imports and that can benefit from the PLI scheme? Any thoughts on that, sir?
I don't have any thoughts. I've actually not gone through the whole thing in detail, Sriram, so I don't want to comment. I have some view, but I don't want to do it unless I really go through the whole thing. We don't know fully yet, actually.
Sure. Thank you.
Thank you. Our next question is from the line of Pratik Kothari from Unique Asset Management. Please go ahead.
Hi, good morning, sir, and thank you for the opportunity. Sir, in the last quarter call, we had made a comment about we venturing into LED lights. We started assembling that in-house and introducing the aftermarket. So any updates on the same? How has the reception been? And just on those lines, please.
Yeah. Mohan?
Yeah, sure. Yes, we have started ramping up the production. It has been received pretty well in the marketplace. As much as we are doing it, we also see our competition also doing it. And there has been some amount of technical challenges, as I would like to call it, because India is a very interesting market. You just introduce a part which is electronic, and which means it can be fitted, and it can be fitted across models, across vehicles, which means that there are certain older generation vehicles which are not able to take this kind of product. There are spikes, for example, let us say in the older generation motorbike, when you kick start the bike, you have a spike coming in, the spike completely buggers up the LED. Therefore, there are challenges. Having said that, we are trying to educate the customers, explain to the customers what can be fitted where, and I think we have been pretty successful there. Demand is pretty good.
Fine. And this is all in the aftermarket, right? Nothing on the OEM side?
That's correct.
Fine. And so my second question is, given our expanded capacity, the one which we did last year on the cables and the lamp side, what is the peak revenue that we could do based on the installed capacity that we have? Or maybe if you can throw what's the capacity utilization currently?
I think, it's very difficult to say based on peak capacity, because ultimately there has to be a customer to do the peak capacity of every line. For example, in Phoenix lamps, you have certain lines which are not fully utilized, but whereas certain lines are requires more material. So I think we have mentioned about our capacities in general. 300 million is our cable capacity and about 110 million is the lamps capacity. The average, the price of these lamps, I mean, again, this is a very thumb rule number, is probably on halogen bulbs, probably anywhere from 35 or 40 rupees is the price per piece. But then again, it's a very general answer. It depends what product and what type. And the cable, anyway, again, I said the prices changes so much. So, the average price can be, I don't know, $50, whatever it is. But then that is it's multiplying that with 300 is not really the right thing to do, because our products are all, designed for a purpose. So they are priced based on that particular thing.
No, fair enough. Appreciate that. Thank you so much, sir, and all the best.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the floor back to the management of SUPRAJIT Engineering for closing comments. Over to you, sir.
Yeah. Thank you all for your continued interest in SUPRAJIT. I appreciate the interactions. We had some good session, 1 hour. I hope we have cleared all your concerns and clarity has been given to you. If there's any further requirement, please contact Medappa, who is our CFO. He can clarify any further requirements. So with that, I say thank you all, and at the same time, thank you to Anand Rathi and Vijay Sarathi for organizing this con call. Thank you.
Thank you very much, sir. Ladies and gentlemen, on behalf of Anand Rathi Share and Stock Brokers, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.